This is Alan Bush with the Daily Financial Forecast for Tuesday, October 25th. Starting out with the stock index futures, we did see higher prices in the overnight trade, much of this linked to better than expected corporate earnings. Also, we are seeing rising prices for many commodities, so that a supportive factor. A little pressure developing with the consumer confidence number at 9 o'clock coming in a bit on the weak side. But I'd have to say overall, stock index futures holding up very well for the news. In fact, I would not be surprised to see futures advancing from current levels, closing higher on the day. Longer term, we continue to believe that stock index futures will remain in a bull market, gains likely to extend through this year and well into next year. Now, moving over to the currencies, we are seeing the dollar index advancing. This on prospects of a Fed funds rate increase at the December meeting. In fact, the probability moving up to 78% from 70% yesterday. So interest rate differentials somewhat supportive to the dollar index. However, we are just neutral right now and have been for the last couple of days. Our feeling is that, first of all, from a historical point of view, that the dollar index has often underperformed in the days just ahead of a U.S. Presidential election. Also, we are seeing the euro currency coming under a little pressure, even though we did have better than expected economic numbers out of Germany as far as their business confidence index is concerned. And the Australian dollar and the Canadian both higher, even though crude oil is a little bit lower. But the Australian dollar is gaining on the Canadian dollar, and this seems to be due to rising interest rate levels in Australia relative to Canadian interest rates. Also, we do believe that China's economy will continue to improve, and we think that it will improve more than the consensus view. In fact, it was just earlier this year that many analysts were looking for a hard landing for China's economy, which we totally did not agree with. In any event, look for the Australian dollar to continue to advance against the Canadian dollar. Now, moving over to the interest rate futures markets, we are seeing a little pressure up front, at the front of the curve. This with prospects of a rate increase at the December meeting increasing a bit. Some strength at the long end with the consumer confidence number, as we mentioned, a bit on the weak side, that being a bit supportive to the bonds. Longer term, though, we feel that the main trend is lower, especially for the long end of the curve, and any rallies that we do see in the 30-year Treasury bonds should be used as a selling opportunity. And we believe this is a long-term trend to the downside in the bonds, lasting through this year and most likely well into next year as well. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.